on? It is James here. I want to shoot a quick video for you. I think the question I get asked more than any other question, I've been asked this a couple times today already, in fact, is how do Fibonacci levels work, and how, more importantly, how do you draw them? So I want to do this video. It's going to be just about Fibonacci levels. It has nothing to do with the market right now. I'm just going to show you how this works. So if we have a move, and Fibonacci levels exist on different time frames. So you might have Fibonacci levels on a 5-minute chart and a 1-hour chart and a 4-hour chart, and they might be all different because your moves are different, right? Your trends are going to be different on a smaller time frame versus a larger time frame. So if we're looking at a weekly chart, this is our weekly time frame, and we want to draw our fibs to try to figure out whether or not we're coming back down to correct, or whether we're still in an uptrend, etc. All we do is, if we're in TradingView, and most charting softwares are going to work similar, we just click our retracement and we draw from the bottom here of this move. That's the bottom where the move started to the top where the move topped out at. Now we don't know for a fact that that is the top, okay? So I don't want you to misunderstand this. See how this leg came down and touched the 38.2? Well, in a lot of uptrends, you'll actually see this. You'll see the legs come down and touch a 38.2 and then keep moving up. This trend was a little weird because we didn't do that. Like I expected back here, when we hit the 9,000 level, I figured we would come down and at least test this. In this case, we just tested the 23 fib and kept moving up, right? Very strong uptrend. In this case, we tested the 38 fib and then we started to move back up. So there's, again, I don't want to get off on a tangent on the market stuff, but basically what this means is right now there's still some reason to believe that this is not the correction and that we're going to keep moving up because it didn't go past that 38, didn't close underneath that 38, all right? But the reason that Fibonacci levels are so important is because if you're looking at a correction, for example, corrections almost always retrace to the 61.8 fib or greater. And I'm going to shoot this video. It's going to take a few minutes, but bear with me because I think this might change your outlook on how Bitcoin actually works. And hopefully it will save you if anybody is telling you that this time is different, this time is different. If we go back, and this chart goes back to January of 2015, all right, and we measure this low to this high here, it's not really much of a move. It's only a couple of weeks. But even that move, if we look, this was our 61.8 fib down at around 191 bucks. Even that move, it went up from a low. The low that day was 109, and it went up a couple of weeks later to 322, so it almost tripled. And I guarantee this was after the big crash of 2013. This was 2015 when the market finally bottomed out. People were probably FOMOing in thinking, oh God, it's going back to $1,000. And instead what happened was it fizzled out, came right back down. Here's our 50 fib right here. You can see it just touched it over and over and over again. And then it came down and tried to touch the 61.8 fib, right? So plenty of chances to get in. This was like holy cow, 8 months. This was an eight-month period where you had a chance to get back in again and again and again, okay? So then if we move over and we say, okay, let's take a look at our next move up. And we measure from the bottom of this one. This was our low, okay? We came up, came down, made a low. And then we measure to the top of that move. Again, over here in the low is $198. This high was right at $500. So again, it 2.5x return, right? So people started to FOMO in, and we got this capitulation top here. And then what happened? Here's our 61.8 fib right, let me turn my magnet off, right here. And literally the very next week it came down and slammed into that 61.8 fib, closed above it, and started its next leg up, okay? So let's move this over to our next big move here. We'll turn our magnet on so that it snaps to the chart. Okay, so here's our low over here at 198. We made our top there, we came back down. Here's our new low. Okay, so our low was 350, we went up to 785. Again, there's going to be a lot of retail public who are FOMOing into that. And what happened? Just a couple of weeks later, came down and hit that 61.8 fib. So at this point, we're now in June of 2016. So we just went through a year and a half of Bitcoin's history, and every single time it's came down to the 50 fib or the 61.8 fib or greater. So let's measure our next move. So here's our next move, and this one was from August of 2016 up through January of 2017. So about a 4 to 5 month period. It went from a low of 483 to a high of 1175. Again, almost tripled. And we had the big capitulation candle on top where people were FOMOing in and then they got dumped on. And what did it do? Here's our 61.8 fib. How cliche is this? It came down and touched the fib and it started going back up. All right, let's move over. Now we're in January of 2017. Let's draw from the bottom to the top of this move. The bottom was around $734. The top was about $1360, so almost double. And what did it do? It went up and then it dumped. Right there's our 61.8 fib. Right, dumped in March, hit it again in March, hit it again in March, started up in April, came down and slammed to it again in April. So a whole month that you had to get back in that market at the 61.8 fib. Okay, let's move over. Now we are in April of 2017 and we're moving up, boy. This thing is just gaining steam. And this is right about the time I got in the market, right around 1,600 bucks. And this thing went up from $900 to almost $3,000, $2,998. It was more than 300%, well, 200% gain. The price basically tripled, and people were saying we're going to the moon. I remember it because I started buying even more Bitcoin around $2,000, and then being new, I got, it started to crap. Let me get this straight. It crashed in my mind. Actually, it was just correcting, but I didn't know it. So I was very panic stricken. But what happened was this thing came down, and as cliche as it is, there's our 61.8 fib. It didn't quite get there. It barely missed it. That fib was right around 1,700 bucks. It made a low of 1,758. And then, but again, it came down past the 50, okay? So there we have it. So now we're gonna move this over, and here's our next move from July of that low, which was, again, 1,758, to a high in August, which was 4,980, right? And then it dumped, and what did it do? Right there, the fib was $2,988. It made a low of $2,975. Are you blown away yet? Okay, so here's our new low, $2,975. Here is our new top, actually 20 grand, right? It just ran right up. This was the blow off top of 2017. This was the blow off top of a 3-year market cycle, and this is the one time that it ignored the Fibonacci levels. Even if you try to look at this move here, it ignored the levels, right? It's not quite as bad. If you look back here, the 50 level is 53.02, and this came down to 55. So it came down past the 38, but it never corrected. It went straight up. And the reason that we had a crash is exactly that, because it never corrected. So guess what happened? Right after it topped out on December 11th, the very next week, it slammed down into that 50 fib. And then a couple of weeks later, it slammed down into that 61 fib, and then we had our bear market. So here's the crazy thing. That was the bull market. If you look at the bear market and you're drawing this in a downtrend, you just draw it the opposite way. You go from your high to your low. So if we go from our high to our low, then what we're looking at is we're looking for this thing to go back up to the 61 level or 50 and make a leg lower, okay? So if we look, this came down, came up. Right here was our 61.8 fib at 16.2. It pinged it on a wick. Tried again the next week to break through it. It failed, and ultimately that became the point of resistance, and down she went. And if we move this down to the new low over here, and we move this down to our new high, this move came up, didn't quite get to the 61.8, but what did it do? Bam, right there's the 50 fib. It hit it, acted as resistance, and down she went. And we move this over again. We look at this. Here's our 50 fib. Here's our 61.8. It came up, touched the 61.8 right here. It acted as resistance, and down she went. Okay, so if you were shorting this market or selling coins and buying back, you got rich if you played these fibs. All right, so there's our high, there's our low. That was a high of 99.50. Our low was right around 57.90. It came up. Here's the 61.8 fib. It touched it. It failed, and down she went. I mean, it's cliche how this works, right? Here's our high. Here's our low. It came up through the 50, almost to the 61.8, and down she went. and we'll make our new high right here, and we'll draw it over to our low, which was in December, our actual low. And this is how we knew that our trend had changed, because watch what happens. Our 61.8 fib was right here. And if we were in a bear market still, or if we were still going to make a lower low, right? There's still a possibility we could. That's not a guarantee. But basically what I'm saying is when this broke, that was a very, very strong signal that the bear market was probably over. And it broke right here on April 29th. So if you had waited and you said, you know, I'm out of the market, but then it broke through that 61.8 and it closed at 5,715. You could have gotten in the market right there and rode this entire trend from 5 grand all the way up to almost 14, all based on Fibonacci levels. So now it looks, there's a good chance like our bear market is over and now we're in a bull market. So this is an uptrend, and again, we draw it from the bottom to the top. And what we should see, if we see a history repeat itself, or at least rhyme with itself, is we should see this come back down at least to the 50, and very likely to the 61.8 or more, and then make a new leg higher up toward, you know, hopefully 16 to 18,000. And that's all based on Fibonacci levels. I'm not going to go into all the other stuff that goes into trading in this one video. I just want you to understand Fibonacci levels. And if you've never seen a video like this before, I would imagine that you're probably blown away right now when you realize that when people are always saying Bitcoin is different. Every time it pumps, they say Bitcoin is different. This time is different. But this is not a different market. This market is like every other market, and you can see that it follows the same rules as every other market. I just showed you every major move on a weekly chart going back over 4.5 years, and every single time except the blow off top of a market cycle followed the rules exactly. So I hope you guys enjoyed this video, and more importantly, I hope you understand how Fibonacci levels work and how you can draw them in an uptrend and also in a downtrend. If you guys enjoyed the video, be sure and give it a thumbs up. If you're watching it on YouTube, be sure and subscribe to the channel. If you're watching it on Facebook, please be sure and give it a like, and leave any questions you have in the comments on either one. I'm happy to answer those for you. As always, please remember I am some guy sitting in a spare bedroom, so nothing in this video is financial advice, and you should always seek out professional financial advice from a professional investment advisor before making any type of investment.